Welcome to TickerWatch. This week, a critical supplier for the entire semiconductor industry, ASML, grabbed headlines with a new €12 billion share buyback and record-breaking orders fueled by artificial intelligence. But while the news sent the stock soaring to new heights, it also saw volatile trading, with shares whipping from a new record to a loss in a single day. So, the big question is, did this week's news solidify ASML's investment story for the future, or is the stock's valuation becoming too stretched? This is TickerWatch News for ASML, Week 5, 2026. Over the next few minutes, we'll break down the key news and developments for the company, using reports published in the last 7 days. It was a strong, if volatile, week for ASML stock. Following the release of its full-year results, the shares rose 3.2% to close at €1,216. Trading was active, with one report describing a whipsaw session where the stock hit a new all-time high before reversing to end the day down 2%. Looking at a broader time frame, the stock has significantly outperformed the market, gaining over 33% in the last 3 months, compared to just a 1.6% advance for the S&P 500. Much of that gain came in January alone, with the stock jumping 30%. The takeaway is that while fundamentals appear strong, the stock's high valuation is creating some back and forth among investors. Top news and headlines. This week's news was dominated by the company's 2025 year-end results and future outlook. First, ASML announced a record fourth-quarter bookings of €13.2 billion, nearly double the analyst expectation of €6.85 billion. This surge was driven by demand for its advanced chip-making equipment, particularly for AI infrastructure. Extreme ultraviolet lithography systems accounted for more than half of those orders, at €7.4 billion. The company reported total 2025 net sales of €32.7 billion and reaffirmed its 2026 revenue guidance to be between €34 billion and €39 billion. In a move that contrasted with the strong results, ASML also announced a restructuring effort. It plans to streamline its organization by cutting about 1,700 jobs, with some reports specifying around 3,000 management roles, to sharpen its focus on engineering and innovation. Management stated this decision was made from a moment of strength to ensure the company doesn't become less agile as it grows. Finally, there was positive news on the technology front. The company's next-generation high numerical aperture, or high-NA EUV systems, are moving forward. These machines, which will cost more than $400 million per unit, saw a significant commitment from Intel. Management noted it is not a bottleneck for customers looking to expand their capacity with these new tools. Market reaction and investor sentiment. Wall Street analysts reacted positively to the week's news, with a flurry of upgrades and price target increases. Barclays raised its rating to overweight with a €1,500 price target. TD Cowen and Morgan Stanley also boosted their targets to €1,500 and €1,400 respectively. Bernstein maintained its outperform rating while raising its price target to $1,911. Investor sentiment, however, appears more divided. On one hand, there's clear bullishness around the AI-driven demand and ASML's monopoly on EUV technology. On the other hand, several reports highlighted concerns about the company's rich valuation. Multiple analyses suggested the stock is trading well above its estimated fair value, with one report flagging it could be overvalued by as much as 59%. The overall narrative is a tug-of-war between the company's powerful growth story and the very high price of its stock. If we look at technical and fundamental aspects, the trend is clearly bullish. The price is trading well above its 50-day and 200-day moving averages, with the 50-day average recently acting as a support level during periods of volatility. However, one report noted that the Relative Strength Index, or RSI, has been in overbought territory for some time, suggesting the rally might be getting ahead of itself and a brief pullback could be on the horizon. On the fundamentals, valuation is the key topic. The stock trades at a premium, with various reports citing a forward price-to-earnings multiple in the mid-40s. While high, this is supported by a massive order backlog of 38.8 billion euros, which provides a solid floor for future revenue. The fundamental debate boils down to whether the company's central role in the AI-driven chip boom justifies this premium valuation, especially when weighed against risks like export controls and a potential cooling in data center spending. What to watch next week? Looking ahead, there are several key themes to monitor. While no specific company events are scheduled for next week, investors will be watching for any signals on the timing of the high numerical aperture equipment ramp and the progress of customer factory completions. Any shifts in capital expenditure plans from major chip makers could also serve as a major catalyst. 3 scenarios seem possible from here. The bull case is that the AI-fueled demand continues to accelerate, the high numerical aperture transition goes smoothly, and ASML's massive order backlog is converted into revenue, pushing the stock towards the high price targets set by analysts. The bear case is that the stock's valuation is unsustainable. Execution stumbles, a slowdown in AI spending, or tighter export controls could trigger a significant pullback, as suggested by analyses flagging the stock as overvalued. The base case might be a period of consolidation, where the stock trades in a range as the market digests the recent powerful gains and weighs the strong growth prospects against the high valuation. Thank you for tuning in to TickerWatch. Please remember, this podcast is for informational and educational purposes only and is not intended to be financial advice. All commentary is based on publicly reported data. We encourage you to subscribe, leave a review, and share this episode. We'll be back next week with more updates.